From Daily Forex, this is Chris taking a look at the WTI market and the Canadian dollar. And as you can see, the WTI market has rallied significantly to reach towards the $65 level. The $65 level, of course, I've talked about in the past about how resistive it has been, how much selling we've seen. At this point, the size of the candlestick is impressive, though. A lot of this is moving due to OPEC Plus carrying those production cuts into April. Now, here's the thing. Sooner or later, shale comes in and floods the market. And we have not been seeing these massive drawdowns of crude oil. So I think this is, I don't want to use the word bubble, but certainly overinflated. And the fundamentals just aren't quite lining up with this. Yes, the world's going to reopen and yada, yada, yada. But we're already above pre-pandemic levels because that was somewhere around $59 a barrel. So we're kind of getting a little overdone at this point. And I think, although I would not be a seller at this point, but when you zoom out, you take a look at the weekly chart, you can clearly see what I'm looking at here. A breakout above here could open up the market to the $70 level. In the short term, I don't know that I would mess with this. We do, after all, have the jobs number to worry about, so that comes into play as well. U.S. dollar, Canadian dollar the dollar has turned around and recovered quite nicely, despite what's gone on in the oil market. And a lot of that has to do with rates. Rates rising as Jerome Powell did not do anything to calm down the bond market as far as speaking was concerned. And now we still look to challenge this trend line. You know, the U.S. dollar itself, the dollar index, is at the highs for the last couple of months. And eventually that has a knock-on effect over here as well. You know, just take a look at what it's done against the Japanese yen. We're right at about 108 yen, just seemingly overnight. It's just been a few days, really. We just got straight up in the air. So this could be leading to some type of breakout. If we break this downtrend line and the 50-day EMA, I think 128, 129 are both your targets. Breaking above this little area opens up the move to 130. Breaking 130, then it's an uptrend. For what it's worth, 125 below is the beginning of massive support on the monthly chart. So we may be just about done with this. If everything lines up, we'll see oil fall and this rise. I don't know. It can get dislocated. Don't necessarily count on one doing that and the other one having to follow. But at this point in time, clearly we've got some targets. Again, though, we've got the jobs number to worry about, so you can't just jump all in right away.